everyone, it's Alex Suslov, Head of Capital Markets at ADM Mortgage, and Billy Abrams, CEO of ADM Securities, here with you for our weekly AD Digest.
Hello everybody. Hello Alex.
Hey Billy. Last week, FOMC meeting and the week before last, inflation numbers brought us a lot of volatility. What was that? 40-year highest the highest inflation in the last 40 years, right?
Correct, consumer. Yep.
We see today conventional rates raised to 5.8%, non-QM is at 7.45%. Fed has hiked the Fed funds rate by 75 basis points, and we're today at 1.75 on the upper bounds, right? We're looking at 3.4% by the end of 2022, then 3.8 by the end of 2023, and that is Fed's expectations, and then going down to 3.4 by the end of 2024. What do you think of such anomaly on the markets from the standpoint of the regulators of Fed funds?
Well, Alex, the one thing that I see, I mean, I look at charts more than pay attention to the news. So first of all, the highest yields that the markets have seen occurred on the close of business the day before the FOMC meeting. So when the Fed raised 75 basis points, the markets actually have bounced since then. We've rallied as much as 20 to 30 beeps at the short end. So the markets full well knew that was coming. They were prepared for it. They priced it in. And that's usually the case. The markets usually stay ahead of the news. So now we've got Fed projections at, like you say, 340 by year end, 380 by next year. And then they think that will probably cause a little uptick in unemployment, a bit of a downtick in the economy, and they think they'll get inflation under control. So that seems to be their best case scenario. A couple of things could go wrong. Inflation could get worse, and they may not put an end to it, which would mean their targets are probably low. I think the bigger question that the markets have, and I don't say it's more likely to happen, I think the bigger question is, can the economy get hurt more than they think? Can the jobs market be hurt more than they think? And as much as you wouldn't think this is important, can the stock market get hit worse than they think? The S&P is 1,200 points off its January high. That's an enormous amount of lost wealth. And a few weeks ago, it had bottomed at 38.10, I believe the number was, and it was a wonderful technical number. And I had one target below that, about 36.16, which is being tested probably as we speak. I think the stocks could have a lot of downside, and so there are several things that can happen that could cause the Fed to have to change their course. I would remind everybody that it was only 3 months ago that 10 of the 12 voting members at the Fed thought Fed funds would be at 175 by year end. They were pretty wrong on that one, and so I don't say they know what they're doing, but when you start trying to project 9 months down the road, a whole lot can happen.
So we might see more volatility next week on Wednesday and Thursday than we even saw last week, right?
I would think so. I think the markets pretty much knew what was going to come out of his statement, but they can't know what's going to come from his answers to questions that they don't know yet. So next week could be more volatility, yes. One more market that I should mention is, aside from having mentioned the stock market, is crude oil, which crude oil a few days ago, the current futures contract hit a new life of contract high, and it reversed $7 that day, closed with a bearish reversal, and has backed up $10 since. It's hard to say that crude oil has quit going up, but boy, it would sure be nice to see relief in that market. So I think that we're in a point here where we've got things, the dust has to settle. We have to see how their plans play out and how the other markets deal with them. And then, you know, and usually the way that happens is markets go up more than they should. They'll come down more than they should. In this case, talking higher yields, lower yields. And they find an equilibrium point. They bounce around. They never go right to the right spot and stay there. So look for volatility and look for it to pick up even more.
Absolutely.
Alex, what do we got coming forward in webinars?
On webinars on June 21st, we'll be talking about non-warrantable condos allowed on our non-QM program for the borrowers who want to secure a condo in a secure unit in a condo where there may be some minor litigations which are not allowed per FANI guidelines. And on June 28th, we'll be talking about prepayment penalties and the ways to have a better rate using prepayment strategy for our borrowers.
Excellent. Okay, a lot to look forward to. Crazy markets.
Yep, absolutely, Billy. We'll be looking to our next meeting the next week. Thank you, everyone. It was Billy Abrams, CEO of ADM Securities, and myself, Alex Suslov, with you for our weekly AD Digest.
Thank you, everybody. Thanks,
Stay
Alex.
tuned. Thanks, Billy.